Good morning, everyone. This is Amit Pabari, founder and managing director of CR Forex. In the coming week, there are three important central bank meeting. First is Bank of Japan meeting, then Fed meeting, and Bank of England meeting. In this presentation, let us understand what kind of an action they are going to take and what impact it is going to have on all currencies. So let me start with first Bank of Japan meeting. In Bank of Japan meeting, there are two aspects which we need to see. First aspect is वो जो bond buying कर रहे हैं 6 trillion JPY का, whether they are reducing that pace or not. We are expecting them to reduce the pace by 1 trillion Japanese yen. Second important aspect is whether they are going to increase the interest rate at this meeting or whether they are announcing that they are going to increase the interest rate in next meeting. We are not expecting them to increase the interest rate in this meeting, but we are expecting them to announce that in the month of October they are going to increase the interest rate, because of which USD JPY might bounce back towards 155 to 156 kind of a level. But the broader trend for Japanese yen remains on the downside. We are expecting it to move towards 150 levels in coming days. So it is important for Japanese yen importer that any opportunity towards 53.50 to 53.20, if they get, they should cover their imports, as the overall outlook for JPY INR remains bullish and we are expecting it to move towards 55.50 to 55.80 kind of levels. Now let us discuss about Fed meeting. Fed का meeting ऐसा होता है जहाँ पे what they do, that is not that important, but what they speak about the future, that is more important. In the current meeting, we are not expecting them to do a rate cut, but we are expecting them to announce a rate cut that they will be doing in the month of September. Now let us understand why we are expecting that to happen. One of the most important indicator for the economy is to understand how are corporates doing, and one of the data points of US is saying that US corporates are not doing that great. US bankruptcy is at the highest level in last 13 years. In the month of June, 76 corporates have filed for bankruptcy. In the first 6 months of 2024, 346 corporate have filed for bankruptcy. One of the main reason why they've been filing for bankruptcy, because they've not been able to sustain the interest rate in their balance sheet. Apart from that, inflation is softening, consumption is going down, growth is lowering. These are all points which Fed is observing, and Fed is going to sound dovish because of that. If Fed is sounding dovish, it can take dollar index to lower level of 103.50 to 102.50 from the current level of 104 kind of levels. If dollar index goes down, it is going to have a positive impact on all emerging market currencies and rupee. Last week, Chinese central bank have done its highest rate cut since April 2020, because of which USD CNY made a low of 7.2109 from a level of 7.26. In fact, at that point of time, RBI had kept rupee at the same level, resulting CNY INR to depreciate sharply and move towards 11.60 kind of levels. With the Fed expected to reduce interest rate, we are expecting Chinese currency to appreciate. And if RBI keeps on buying dollar near 83.50 or 83.60 kind of a level, then CNY INR is going to shoot up, which is going to adversely affect our trade deficit with China. While it remains to be seen what steps RBI will take in coming days, till that time we are expecting rupee to trade in a narrow range between 83.50 to 83.90 kind of levels. Now let us discuss strategy for thin margin exporters like agri exporter, chemical exporters, most of them are taking costing near 83.50. We'll suggest them that they can cover 80% of their exports between 83.65 to 83.70 kind of levels. For remaining exposure, they should keep a strict stop loss of costing or 83.50, whichever is higher. Now let us discuss strategy for thick margin exporters. Between 83.60 to 83.70, thick margin exporters should hedge 60 to 65% of their entire turnover if they are hedging on anticipation basis, and if they are hedging against confirm order, they can maintain a hedge ratio close to 75 to 80%. Now let us discuss strategy for importers. Importers should keep a strict stop loss of 83.75, and they should wait for a lower level of 83.50 to 83.35 kind of level. If rupee comes near 83.50, then they can cover 50% of their next 1 month's import payable. With this, I will end my today's presentation. Jai Hind, Namaskar, फिर मिलेंगे next week. Thank you.